Good morning, traders and investors. It's August 10th, and while headlines scream from the Middle East to the courts of Dublin, Wall Street is quietly climbing a wall of worry. The S&P 500 is up 0.6% to 7,757. But beneath that headline, something far more interesting is unfolding. Let's break down what every market is telling us right now. We're operating in a neutral/mixed signals regime. That means no clear directional bias, just indecision. Volatility? The VIX is sitting at 14.9, down 1.65% today, dangerously calm. But here's the thing. When everyone's quiet, the next big move often comes fast. In neutral regimes, the next catalyst becomes king. And right now, all eyes are on a CPI inflation report coming in just one day. So what does that mean for your portfolio? Let's walk through it. Here's the scoreboard. S&P 500, up 0.62% to 7,757.64. NASDAQ, up 1.3% to 26,690.615. Dow Jones, up 0.28% to 54,036.93. Russell 2000, up 1.1% to 3,034.494. Gold, down 0.43% to $4,380.60. Oil, WTI, up 0.81% to $78.81. Bitcoin, up 0.27% to $65,024.70. VIX, down 1.65% to 14.9. Dollar index, DXY, up 0.16% to 99.696. 10-year yield, falling slightly to 4.66%. What does this tell us? Equities are holding ground despite global tensions, but gold and oil are sending mixed signals. That's the definition of a market waiting for direction. Let's zoom into today's biggest movers, because in a neutral regime, individual stock stories matter more than ever. First up, Team Atlassian. Shares surged 35.31% to $149.07. Making it the top gainer in the S&P. While the options market is flashing caution, the put/call ratio stands at 1.21, indicating bearish positioning. Yet earnings have been stellar, 4 straight beats, with the last surprise coming in at plus 22%. They're selling hard, an MSBR of minus 100. So while Wall Street loves it, 82% by ratings, insiders are cashing out. This is classic momentum behavior. Retail buying strength while institutions hedge with puts. Watch closely. If CPI disappoints tomorrow, that bearish option structure could unwind quickly. On the flip side, DOX jumped 32.62% to $27.40. Unlike Team, insiders here are buying. MSBR of 99.15. Split, 50% neutral. Earnings beat only half the time. This feels like a short covering rally fueled by optimism around healthcare digitization. Then there's FIGS, up 26.87% to $14.26. A lofty 69.6x. Revenue growth is strong, plus 28.8% year over year, but insiders are selling again. Momentum chasing? But call options dominate. P/C at 0.61. Suggesting institutional confidence remains intact. Now let's talk about the losers. Similarly, TD, the trade desk, fell 21.9% to $13.80. Revenue growth has slowed to just plus 3% year over year, and earnings missed last quarter by 15.1%. Insiders are buying. MSBR 100, but analysts are split. In a neutral regime, weak fundamentals get punished fast. Crypto is holding steady. Bitcoin is up 0.27% to $65,024.70, hovering near its 52-week high. Altcoins like Matic and ADA are showing relative strength, both up over 1%. ETH is inching toward $1,922. Because in a risk-on environment, even a cautious one, crypto still benefits from speculative flows. The dollar is firm, yes, DXY at 99.696, but not strong enough to choke out risk assets yet. down 0.43% to $4,380.60. Not surprising. In a regime where equities hold and yields stabilize, gold loses its luster. Up 0.81% to $78.81. Tensions in the Middle East, Iran's stance on Hormuz, Yemeni attacks, are keeping energy markets nervous. Brent crude is above $84, adding cost pressures to transport and manufacturing sectors. And let's not forget the world outside the screen. Iran is linking the reopening of the strategic Hormuz channel to U.S. concessions, a move that keeps oil prices elevated. Yemen saw another deadly Houthi strike, 7 killed, 30 wounded, reminding us that conflict zones remain volatile. Netanyahu rejected Trump's latest Gaza proposal, adding another layer of uncertainty to regional politics. And in Dublin, an alleged crime boss faces charges, a reminder that even financial markets aren't immune to legal drama. All of this feeds into our mixed signal regime, where fear and greed dance in equal measure. Markets don't send invitations. They send signals. Today, the S&P 500 closed at 7,757, up 62 basis points. The Nasdaq outperformed, adding 1.3% to 26,691. The Dow lagged at 54,037, up just 28 basis points. Small caps? Russell 2000 ripped 1.1% to 3,034. But here's what matters. The VIX dropped to 14.9. The 10-year yield slipped to 4.66%. The dollar index ticked up to 99.70. Gold gave back 0.43% to $4,380. Oil climbed 0.8% to $78.81. Bitcoin barely moved, $65,024, up 27 basis points. Everything moved. Nothing broke out. We're in a neutral regime. Mixed signals. Indecision. And in this environment, the next catalyst isn't just important. It's everything. CPI drops tomorrow. That's your catalyst. I'm breaking down every cross-current, 3 trade setups with exact entries and stops, and the 2 lenses that separate retail noise from institutional signal. Let's decode. Start with the regime. 80% confidence. Risk on. This isn't a guess. It's priced. The S&P at 7,757 with the VIX at 14.9 tells you hedging demand has evaporated. The 10-year yield falling to 4.66% while equities rally? That's growth concerns dominating inflation fears. The 2-year yield dropped even harder, 3.71%, down 59 basis points today alone. The curve is steepening on the short end. Historical parallel, early 2023. Rate hike fears eased, the VIX compressed below 15, and the market grinded higher for months. We're in that same structural window. Well-established regime, likely to persist near term. But, and this is critical, complacency is the risk. When the VIX sits at 14.9, everyone's long. Positioning is crowded in momentum names. The next move, when it comes, is often violent to the downside. Playbook for this regime: overweight equities, high beta, growth, small caps. That's why the Russell outperformed today. Overweight crypto, high beta plays well here. Overweight commodities, demand assumptions positive. Underweight bonds, duration risk not rewarded. Underweight the dollar, typically weak in risk on. Gold neutral, opportunity cost versus equities. Today's price action, textbook confirmation. Semiconductors led at plus 2.02%. Biotech plus 1.86%. AI robotics più 1.81%. Crypto ETFs plus 1.68%. Consumer discretionary plus 1.49%. Technology plus 1.42%. Materials plus 1.32%. Defensives? Nowhere to be found. 2 completely different readings. This is where edge lives. Look at the biggest mover today. Atlassian team up 35.31% to $149.07. 35% in a single session. 52-week range. $56 to $184. It's knocking on the high. But pull the institutional data. Options put /call ratio 1.21. That's bearish positioning. Heavy put buying, institutions hedging or betting against the move. Insider sentiment. MSBR negative 100. Corporate insiders are selling aggressively. Yet Wall Street consensus, 82% by ratings. This content is for educational and entertainment purposes only. It does not constitute financial advice. Always consult a qualified financial advisor before making investment decisions.